What is going on, you guys? Back again with another video, starting off like we always do on the Bitcoin chart. I hope you guys are having a great day. I hope the market's treating you well. Hope you guys are staying safe out there. Let's get right into it, alright? So we're looking at the Bitcoin chart, 4-hour chart. We'll zoom back a little bit to get some data on this thing. Last time I talked to you guys, we were in this candle here with our weird wick. We fought our way back up to get above the highs of the ETF hype here. We touched 36,000, right about 36,000, right below it, and then have seemingly headed back down to here. Seems like we're gonna try and build levels out here and continue higher on the ETF news, and we're gonna jump right into one article real quick before we get into breaking down what the chart looks like. An article by Cointelegraph saying that spot Bitcoin ETF hype, the price rally isn't guaranteed to stick, which nothing is guaranteed in markets. There's a certain part of this, I don't know who this guy is, a flow horse who boasts 184,000 followers on X, said that the two blips could be seen as a hint of Bitcoin's price action should a spot Bitcoin ETF be approved. I agree. There's a certain part, here it is, that while approval is likely to drive prices significantly upward, it is also likely it will be followed by an eventual retrace in the midterm. This is because, in the flow horse's view, the trade will be crowded heavily by eager traders, eager investors looking to chase the news. You're going to have a ton of crowding, and that's ultimately an inefficient move. The inefficient moves get refilled and retraced to some degree. Tony Sycamore, an analyst at IG International, told Cointelegraph that he expects to see Bitcoin continue to surge to new yearly highs on the day of the announcement, while Rachel Lucas, a technical analyst at Australian crypto exchange BTC Markets, said approval of BlackRock's ETF will act as a catalyst for the rest of the traditional financial sector. I don't really agree with that. I think that this, whoever this is, Rachel Lucas, I think this is a bit of hopium. Bitcoin and the traditional financial markets are wildly different, and an approval of Bitcoin ETF doesn't mean that Goldman Sachs or Facebook or any of these others are going to rally, especially when we've already seen Bitcoin separating from these stocks, whereas the last bull cycle Bitcoin is kind of treated as a speculative tech stock, and we kind of just went along with their price action. We've seen a huge difference in that. Let's close this real quick. So I think that's a bit of hopium. I don't really think that will happen, but I do agree that we will see a spike once it is approved. But I do also agree that we will probably see a retracement, just as we've seen with all of these moves. We spiked up here, we spiked all the way up to 35, we came back down to 33. We stayed here for a while, we spiked up to 36, we're coming back down to 34, and probably moving over, with this big candle hopefully stopping at the resistance here and moving up. But I agree with that. There was somebody else's view. Okay, this is what it was. Tiana Tang says an analyst from CMC Markets also believes that it would be worthwhile to adopt a more cautious stance, as there's no guarantee of an all-out trend reversal, saying Bitcoin still lacks fundamental support to a quantitative valuation like shares. and does not have the scope of utilization like commodities. And an approval by the SEC cannot change the nature of it being a speculative asset, which is just completely. I don't understand. This is what happens sometimes when TradFi people come into Bitcoin and maybe get a little bit jealous. I don't really know. I don't know what the motivation behind it is really. We don't need a value. There's no need for valuation as shares, and we do have Bitcoins as sort of a similarity to shares. And as far as the scope of utilization goes, I think Bitcoin has more utilization than a lot of commodities. A lot of commodities are food. Food has one utilization. Food. Bitcoin has a store of value, a payment system. They're building out smart contracts. They're trying to put stable coins on Bitcoin. Bitcoin is also already backing a lot of stable coins. Bitcoin has been doing trillions of dollars of transactions cross-border. There's more utilization for that than rice and cattle. So I really don't know where that comes from. That's just a little TradFi coming in there, getting a little jealous. Macro changes will have a major impact to the crypto markets, especially which usually start building an upside trend during a Fed rate cut cycle. Which I agree. You know, the current interest rate makes things hard to move, but as we're going to go into in a minute, I think the Fed, I think they're moving to maybe next month, maybe January, doing their first rate cut and seeing how that goes, because they can always go back. ETF analysts have also said that Chair Gary Gensler could be waiting until the very last minute to pull off an amazingly sadistic denial of the impending applications. While analysts from JP Morgan claimed in October's 17 investment note that approval could arrive within the next several months, the general consensus held by Bloomberg ETF analysts Jerry Seyffart and Eric, I'm not trying to pronounce that, pegged the chances of approval by January 10th next year at 90%. I think that if Gary Gensler, after being called to court and being ripped apart in court for everything that he's done, for putting the U.S. behind, and we have the most advanced financial markets, and you try going to trade stocks over in Europe versus over here, or over in Asia versus over here, it's night and day. But then you change to crypto, because we've been put so far behind. 90% of crypto exchanges can't even function in the US because there's no regulatory framework. There's just attacks. There's just people getting called into court. There's no framework they can go off of. People are just wandering into this space and trying to figure it out, and then getting called into court. So I think if Gary decided to do that, especially with BlackRock being involved, especially after being called to court and getting torn apart, if he did that, that's a little bit of market manipulation. I don't think that would end very well for him. They're already talking about taking the I think it was they're planning on giving the SEC a subpoena to appear in court again, or taking him right out of the position. So I think he's on very, very thin ice right now. I think if he did that, with the courts already saying you have no reason to not approve this, I don't think that ends very well for him. So I don't think that'd be a very, very smart move for him. But yeah, that's it. And this couple of analysts that I wanted to show you guys a little bit different perspective. You know, some people thinking that we're not going to move at all. Some people thinking that we're going to have a huge new yearly highs, and then kind of in the middle that we are going to go up, but because it is going to be a FOMO move, because it is going to be a FOMO move, that we will see a bit of a retracement. So that's just buying opportunity for us. Remember that in all of this, everything that's happened from 69,000 to now, everything has been an extrinsic thing. Nothing has been directly, Bitcoin hasn't done anything. Nothing has changed with Bitcoin. Bitcoin didn't go down. Bitcoin's code didn't crack. Bitcoin didn't get hacked. Nothing happened to Bitcoin. All of this was because is a combination of bull bear cycles, FTX collapse, Terra Luna collapse, and just general market sentiment. Absolutely nothing has changed with Bitcoin. So if we see people starting to value the undervalued asset correctly, then that's when the price correction comes, and the price correction in this case would be to the upside, because intrinsically nothing has changed with Bitcoin. All the factors, and this is a bit of an annoying thing as a Bitcoin investor, but a bit of a good thing as a Bitcoin investor, because extrinsic things pushing the market down just gives us an opportunity to buy. Because if Bitcoin was properly priced all the time, the price would be a lot harder, and we wouldn't be getting in. It'd already be crazy expensive. So just understand that the difference between intrinsic and extrinsic risk is massive. This is why we do not just technical analysis on a chart, which is good to see, to like put a price image in your head, but also fundamental research into the underlying to understand what it actually is. That way, when these tailwinds are blowing, we're sure on our course, because we know that nothing has changed with the underlying. This has all been extrinsic stuff. Alright? So, that's it with that. The next thing we're going to move into today is, speaking on the Fed minutes already, let's pop over here. The Fed has decided to hit the pause button again. The Federal Reserve left interest rates unchanged at the conclusion of its policy meeting today, marking the second meeting in a row where the central bank has skipped a hike in its current policy tightening cycle. The call, which was unanimous and widely expected, keeps the target for federal funds rate at 5.2% to 5.5%. The FOMC statement didn't rule out future rate hikes. At the press conference, Fed Chair Jerome Powell said that officials weren't yet satisfied with the progress being made on inflation, and that monetary policy might not be restrictive enough. Policymakers are also watching bond yields, which have contributed to tighter financial conditions. Now, this is good. The Fed hit the pause button again. It seems that we're moving more likely into the Fed lifting rates a little bit, which would be good. The thing is with the Fed, they have found out that announcing a actual rate cut or a pause or a hike or whatever is about as effective as them talking about it, because of the reactions of the market, if you understand what that means. So it's been said, I don't have the articles pulled up here, that when the Fed makes an announcement of what it is going to do, the markets, and you can see the markets reacting as the meetings are going on. So the markets react immediately to the words of the Fed. So them saying that there's gonna be possibly another hike, that they don't know what they're gonna do in the future, that they're not satisfied with the inflation and the watching bond yield. What's gonna happen is immediately what is already good enough for them to pause. All these companies, all these people are going to look at it and panic a little bit, FOMO a little bit, and start putting policies in place that benefit the Fed in their view. So their announcement, their words, not even official hikes or pauses or, coming down with the rate, them just talking about it is almost as effective as them doing it. So them seeing this pause and the companies being like, okay, all right, we got to pause, but then I'm saying, oh, there might be another one. As soon as they get that breath of, okay, we got to pause. Oh no, they might hike it again. All right, we got to go back to cutting pay. We got to start taking out less debt. And then companies all up and down the chain are going to react to that live. And you can see it in the stock market, you can see it in the assets, you can see it in the bond market. It reacts immediately. So this is good for us that they've hit the pause button again. And if the markets and companies react accordingly to them saying they might hike it again, we could see maybe December. If we get a pause in December again, then I'm feeling very likely in January we're gonna hike them back down. But this is good for us, and if the markets react accordingly, then we could see some lightening of this. And what we got to remember is we want Bitcoin to be completely separate from the government, from all their tamperings, from all their policies and everything. A completely separate asset. That is the point of Bitcoin, to be unaffected. You're never going to be unaffected completely by these things just because of money. The reason that these policies I feel are really hitting Bitcoin right now is because the policies are causing a tightening in the economy and a tightening in people's pockets. So it's not necessarily that these policies are directly affecting Bitcoin, it's affecting the people that buy Bitcoin. You have people with more money, people buy Bitcoin. But if people can't afford to buy groceries, people aren't going to be able to buy Bitcoin. That's just kind of how it goes, So we move on to the next one. PayPal faces action related to their stablecoin. I feel like this is pretty similar to Facebook's old stablecoin project that they used to have. They've been subpoenaed by the U.S. Who was it? By the SEC, of course. They just disclosed it today. They said they're cooperating with the SEC on this. They're probably going to check what they're backed by. They're saying right now they have US dollars, short-term treasuries, and similar cash equivalents. With 150 market cap. Not a lot going on there, but just showing that they are going to start coming after stablecoins. But I really don't think that they're going to try and take stablecoins off the map. The only reason I think that is because of this thing right here. They're backing it with short-term treasuries. They're backing it with treasuries. There is a huge problem of people not wanting to buy enough treasuries. So if you prop up a whole new market and make regulations for it, make this market thrive, and then at the same time you give these people something to trade against with the US dollar, but also make it crypto, but also make it so all these people that want to have this stablecoin, you make yourself a customer for US treasuries. I think that's very powerful for the government. I don't think that is something that they're unaware of. That this could be a new customer for treasuries. And as the crypto market goes up and keeps developing, and more trading happens on this, the more they're going to need to buy these treasuries, and the more they're going to be bought from from the U.S. And it's going to be better for them. It's a mixed bag for crypto because it's going to be centralized and they're going to be involved in it, and you really want markets based off Bitcoin or whatever. But this is just the reality of it. In trading and investing, oftentimes you have to separate what should happen differentiated on what is happening. There's a lot of things that should be happening, and if you get caught up in the should too long, you'll watch it actually go right by your face. So I think, especially with the SEC looking into Pi stablecoin, with them looking into Tether, I think as long as they're buying enough treasuries and buying enough dollars and propping up the US government at the same time that they're propping up the crypto market, I really don't think that the Fed is going to bother with them that much. And that's my 2 cents on that. Top Swiss bank launches Bitcoin and Ether trading with SIBA. So we have Switzerland's St. Galler Kantonalbank, one of the largest banks in the country, moving into cryptocurrency by introducing Bitcoin and Ether trading to its customers. SGKB has partnered with global cryptocurrency-focused SIBA Bank to offer its clients digital asset custody and brokerage services. Announcing the news on November 1st, the two banks said that the new crypto service is immediately available to select customers following a short period of testing earlier this year. Starting with Bitcoin and Ether support, the bank plans to expand its offerings to additional cryptocurrencies based on client demand. The bank, founded back in 1868, is a major Swiss regional bank offering retail, commercial banking, as well as private and institutional banking. The bank is the 5th largest bank in Switzerland with a total of $5.8 billion in assets under management at the end of 2022. This is the bank's first step into the digital asset industry, allowing banking customers to seamlessly access cryptocurrencies within their investment portfolios. Very important. We are pleased to offer select client-based access to digital assets and digital economy. Adding, thanks to our cooperation with SIBA Bank, we have implemented a straightforward initial setup that allows us to learn and grow well aligned with our customers' need. We are confident that our clients' digital assets are protected by the custody of a professional and certified provider with extensive experience in this field. SIBA's crypto partner, or SGKB's crypto partner SIBA, is a global Swiss regulated bank for managing, investing, and storing cryptocurrencies, non-fungible tokens, and other assets. After receiving a banking license from the Swiss Financial Market Supervisory Authority in 2019, SIBA has been actively onboarding crypto services to major private and retail banks, including LGT Bank Liechtenstein and Bank Julius Baer. The Swiss crypto ecosystem has rapidly evolved, with many local banks introducing cryptocurrency services. In September 2023, a licensed Swiss bank, Dukascopy Bank, officially launched its crypto-enabled services, including marginal trading and online retail banking accounts. We believe that cryptocurrencies play a significant role in today's world, Dukascopy's bank's chief brokerage officer told Cointelegraph. We are confident that offering crypto-related services to a regulated bank adds substantial value to the cryptocurrency industry as a whole. Why this is important is, if you guys are unaware, a lot of rich people do their banking in Switzerland. There is a lot of money in Switzerland. This is only the 5th largest bank, and this trend is only going to continue. as things become more regulated. Again, what you guys got to remember is the U.S. is behind in this. A lot of other countries have started offering this stuff. They're just starting to roll it out, but we haven't even gotten to the point where any real banks are touching this. And you're talking about everybody who is touching this stuff right now, that is an institution, is risking stuff right now. That's why a lot of rich people haven't bought into it yet, because you work hard for your millions and billions to put yourself in that 0.00% of the world. You're not going to put it in something that all of a sudden, oh, okay, boom, FTX takes it and we're gone. Or the SEC says no, and all of a sudden your money is locked up. It's going to have to be regulated, and when things like this happen with banks putting it more and more in, it's just going to keep going. And like they said, this adds a level of what's the word for it? A level of prestige, I would say, for lack of better words, to the cryptocurrency space that especially Swiss banks are moving into it. And this is nothing but good for Bitcoin. And let's end out on the chart here. Let's back out to the daily. Let's go out to the monthly. Let's go 5 years. Here we are. The weekly. So as you can see, bottomed out in October of last year. Been a slow climb up. You hit here a couple of times, power through there. We started the new weekly candle, new monthly candle here. And we're right in this. We're right in the thick of it here. Our next move would be to about 40,000. I think we'll see a slow climb up, and then once it gets approved, we could see, I don't know, I'm not gonna give a prediction where we're gonna wind up at. I'm just gonna say we'll probably see a flurry of investors coming in, and yeah, whether we get a retracement or not, it's gonna be good for the next few years, guys. It's gonna be, if things keep moving forward the way they are, and the asset starts reaching price correction and realization, it's only gonna be good for us as more. That's why right now we gotta stack as many sats as possible, and yeah, hope you guys stay safe out there. Hope you guys are staying informed. Again, nothing said in any of these videos or any content produced is financial advice. Every financial decision you make is your decision and should not ever be based on anything I say here. This is strictly for educational and entertainment purposes. I hope you guys have a great day.